Hello, hello. Welcome to another episode of CEO Conversations, the Private Practice Podcast. I'm so excited because we have an amazing guest here today. And we're going to be talking all about money and financials and wealth and all the things. Welcome to CEO Conversations, the Private Practice Podcast. I'm your host, Brandy Mabra. It's time to show up as a confident leader to create a practice and life you love. So, Anna, would you like to go ahead and introduce yourself and tell everyone where you're coming from and all the stuff, all the amazing things?
Yeah. Well, thanks so much for having me, Brandy. I'm super excited to chat. Money is one of my favorite topics, and I'm always happy to talk about it. So I am the founder and CEO of Poder Wealth Advisors. We're a boutique wealth management firm that focuses on working with women entrepreneurs that want to have an impact with their wealth. I am currently in New York, but I'm based in DC. We're doing the summer juggle and moving around with kids and visiting grandparents and all that, which is super fun. But overall, super excited to be here.
All right, thank you so much. I'm excited. So I know about you. I know we first originally met this time last year, which is so funny,
Yeah.
where you came and talked to our clients inside of our private practice CEO program. And there was just so much wealth that you had passed on. And we talked not just only how to leverage your practice to build wealth, but also how to make sure that you're setting yourself up for success, like even when you want to sell your practice or
hmm
just putting yourself in a position to leverage the asset that you're building. So do you want to give people like a little bit more about blind spots that you might see
Yeah.
when talking about wealth building, how you got into this space of working with entrepreneurs and private
Yeah.
practice owners and all the amazing people that you work with? And
Yeah.
yeah, so give us the gems.
Happy to. So, just for perspective, I am someone that grew up in New York City, like children of immigrants, not with very little financial fluency, and I was really thrust into this world of wealth management. Divine, call it divine alignment, call it just circumstances, but I ended up working in wealth management, and my eyes were so open as to
Mhm.
the lack of knowledge that was around me in my personal life versus the conversations that I knew very wealthy folks were having. And so I spent 10 years just really delving into that, initially thinking I was going to figure this out for myself so that my family would be in a much better financial position long term. I was able to do that. But then after a while, I decided, I want to do this a little bit differently and I want to share this information because I know that there's so many women in particular that are so impactful, that are so smart, that are so driven,
Yes.
and they don't necessarily have this perspective that I think can really help unlock so much abundance for them. And I credit that time with just completely changing my own family's financial trajectory. So I left, I started my own firm 6 years ago. And funnily enough, I started to see so quickly, I didn't have the initial inclination to work with entrepreneurs, but I saw so quickly through a few initial clients who were entrepreneurs and through my own experience of how much more control I had over my income and my earning capacity and therefore my wealth building through that. Within a year, I was earning more than I had at my highest level in corporate, and I had a really solid job in finance. And that opened my eyes. But then I was seeing with a lot of my clients who were earning really well that they didn't necessarily have the strategy or the perspective that I had to
Mhm.
be able to translate that into wealth in an efficient way. And what I was seeing was the business was doing really well, but their personal finances were not doing as well. And so they're looking at this business and saying, this is bringing in multiple six figures, sometimes seven figures. And yet, I have myself on a $50,000 a year salary, which seems crazy, but it is very real. I'm sure, Brandy, you've seen it
Yes.
before, because that's the tax optimal thing to do. And so I viewed my role as stepping in to help marry the personal goals of the entrepreneur, the business owner, with the tax strategy and the long term financial strategy to make sure that those were really harmonious. Because I think while entrepreneurship has the opportunity to really completely change your financial life, it that could be to the positive or to the negative if
Mhm.
it's not appropriately managed.
Yeah, absolutely. I always see where people, there's like an identity shift that needs to happen as you're building your business, you know.
Hmm.
And with the salary piece, people kind of stay. This is where I initially start paying myself, or I got to this amount of money and now it feels safe to me, or I know what I'm going to owe, or just all kinds of things that can go into that. But I always remind people it's an asset that you're building, like a true asset that can help you generate so much wealth if you decide, and if you have the right financial partner. I think the wealth management piece is a big piece. We always talk to accounting. You need an accountant, you need a bookkeeper, you need a CFO, but you also need a really great financial planner who can set you up for today, but also make sure that they're setting you up for tomorrow too. So like
Agreed.
when it comes to just thinking about the best vehicle. So I heard you say tax strategy. I heard you
Mhm.
say just setting yourself up for real financial independence. Then what goes into that?
Yeah. So I'll take a step back. I'll definitely get tactical for a second, but I think the perspective is really important where it's twofold. One, as the owner, your job is to make sure that your business is taking care of you. And that is not necessarily in a self-serving way, but this is it serves a dual purpose. First and foremost, you want to make sure that what you're paying yourself, either through salary or through owner profit distributions, is sufficient to cover your lifestyle and your financial goals, right? So whether that's paying for kids' college, paying for private school for kids, retirement goals, buying homes, investing in additional properties, like it's really important that you're factoring that into your overall compensation number and you're thinking about that because it's not just about is this business giving me enough income to pay for my lifestyle, although
Mm-hmm.
that's important. It's more than that, and so I think that's really an important mindset shift. Secondarily though, businesses that pay you market rate plus some, right? So you as the owner operator of the practice should be making a salary that is comparable to what you could go out and get as a job, and on top of that you should have enough profit to whereas it's going to be a viable asset. That is what a seller's looking for. And so when you think about the business taking care of you as an owner, that is so important because one of the numbers that we look for when thinking about buying or selling a business is seller discretionary earnings or
Mm-hmm.
EBITDA, right? And not to get super technical, but it's really just like what is the profit after the business is being run? And that is a multiple of that is usually going to be what you're going to sell the value of the business for. So using easy numbers, if you have $100,000 of seller discretionary earnings or $1 million of seller discretionary earnings, then you can probably expect, I don't know, 3 to 8 times that. So 3 to 8 million as your sale price that you could command for that reasonably. And that there are variations with that depending on the practice, but that's something you really want to track for. And so I think we get lost in the grind of building the practice or just in is it am I making my payroll, am I meeting my household bills, and that, we need to think more expansively from that. Beyond that too, I would just say, it's one of the things that I just don't understand why people overlook this, but they constantly do is I think so many entrepreneurs get caught up on building their business, building their practice, and they want to get it to a certain revenue level and they leave
Yes.
so much money on the table over time because they don't want to set up a retirement plan. And I get it. It's very complex. It feels like it's a big commitment. You don't necessarily know if this is something that's right for you. But if you think about, let's say for every dollar that you invest in that plan, you're going to save yourself 25 cents. That's a pretty solid return. If I put an investment in front of you, Brandy, and said, you
Mm-hmm.
get 25% return on your money or 25% back, you'd say, yes, that sounds like a great, like, sign me up. Where do I sign? That is something that's really important and it can help because it helps reduce your taxable income. It
Mm-hmm.
allows you to build wealth in a really tax efficient way, never mind even some of the like cash balance plans and things like that that are really well suited for a lot of doctors, dentists and folks that might have a practice.
People put themselves inside of a box, and what I always say is, and what I pay attention to, and sometimes even ask my clients the question, like, what are you looking at on social media? And from a revenue perspective, yes, like absolutely, you want your business to make money. You want to get to. I love like when folks are like, we had a client who this is like her first 7-figure year. Amazing.
Mm.
Absolutely. There's clients where they came to me with 7 figures. We've had to scale back and now they're getting back to 7 figures. There's clients that I have who are in the multi 7 figures, but every single time we talk to this financial bucket and making sure that you're setting yourself up. If people put themselves inside of a box where they think like, oh, I've made it. And I'm like, no, you
Yeah.
haven't made it. There's so much more, regardless of how much money you're making inside of your practice, regardless of the revenue, what are you doing with your profit? Like
Yeah.
where's that going? Because that's the true sexiness of the business. And that's the true, like when we think about financial health,
Hmm.
that's part of the financial health of it, but also how are you leveraging it?
100%. 100%. And I say, like one of my business coaches says, revenue is for vanity, profit is for sanity. And
Mm,
if you think about, to your point, the social media world is so loud.
mhm,
And I think it's really a shame. I think it's great to shoot as far and as high as you want with whatever endeavor you're going to be taking for your professional career. I think that's an incredible thing to do, and it can be really transformative for us as individuals. So I don't want to discourage anybody from shooting high. However, sometimes we're shooting for things that are not at all grounded in reality. Okay.
mhm,
So, you may be saying, I want to hit $2 million of revenue. But if you're not managing your profit appropriately, you're just going to be working a whole lot more and not pocketing any more of that and not alleviating your financial stress or building wealth for yourselves. I've seen it all. I've seen folks with businesses, practices that are generating multiple 7 figures that are barely paying themselves a few $1,000s a month.
mhm.
And that doesn't match up unless you have an actual strategy to get yourself to the right place.
Yeah, because like money can be fun. That's what I always like. It can be super fun. And especially when you get to the place where you're starting to see the fruits of your labor, right? And when you
Mhm.
have that kind of revenue coming in the door, it can be fun, but you have to have the structure set up to benefit you too and the lifestyle that you want to live. So I'm curious to know how do folks know, like if they're in this journey? Because I know that we have some who are at the beginning parts. I know that we have some
Mhm.
who are again at like the multi seven and in between. We have some folks who are even closer to 8 figures.
Mhm.
How do you know when you need to be placed with a financial planner? Just to give some precedence for, we just came off a retreat in Austin, and I told everybody there's two things that you can do with your practice. You can either leave it for legacy, and if you're going to leave it for legacy, you want to leave something that's financially healthy, that's not
Mhm.
chaotic, that makes sense, that's streamlined, efficient, all those things, or you can sell it.
Mhm.
So, like, you have to have the clarity for what you're doing. Either way, I always say best practice is for you to just automatically say, I'm going to sell it. Because when you think about selling it, you're going to do everything that you need to do from making sure it's profitable, making sure that there's policy and procedures, operations, and things. But when does it make sense for those who are listening? Oh, I need Anna in my life, or I need someone
Yeah,
like Anna in my life.
it really depends. I think that if you are finding yourself confused. There's a couple trigger points that I usually see. One, I'm confused about why I owe so much money in taxes is usually a sign that there's not a concrete strategy and not proactive planning happening.
Hmm.
No shade on accountants, but I think a lot of them are reactive. And if folks do not have an outsourced CFO that is doing proactive planning, if they don't have a CPA that is doing proactive tax planning, then they can tend to get blindsided by things. And that's usually a sign to me that they're earning enough revenue where things are starting to get fun. And also, they don't necessarily have that strategy. I would say that's one. Two, I would just say anytime you're planning for that eventual retirement, eventual exit, if there's, if you have other doctors or folks buying into your practice, that's a good time to just revisit and say, what do things look like? And am I on track? If you find yourself feeling anxious about your financial trajectory long term, um, that is another one. I recently had someone come to me who was a dentist, and she had one, or an orthodontist, excuse me. She had one location,
Hmm.
was considering opening another because she felt like I have to grow my revenue so that I can afford my lifestyle. And that was and this was already a multi 7 figure single location.
Hmm.
That told me that there was some work to be done around cash flow planning, around tax planning, around being really intentional about where the cash was going, because if you feel tempted to scale,
Mm-hmm.
you also need to know what your numbers are there. So I would say those are really important times to look for some additional support.
Yeah, I love it. I think that to your point, it's more or less about, especially for the owner with the multiple seven, or I'm paying more taxes, or I'm not able to do what I want to do within the lifestyle that I've created, or I feel broke. That's what I see. Like
Hmm.
a lot of times where all
Yeah,
this money's coming in, but I still feel broke and I still
yeah,
feel like something's missing too. So, for the folks who like want to actually sell their practice, what are some signs for them to get ready or to sell
yeah.
or not to sell?
I would say getting like a sellable business is a business that you're going to enjoy running.
Mm-hmm.
I think it's one that is going to allow for a lot of expansion, and time and free time for the owner. So I think it's a worthy endeavor, regardless of whether you're actually going to sell or it's a legacy, like you want to leave it to kids or somebody else. However, I would say I think that it's really important to think about your timeline first and foremost. Because from my perspective, you probably need 2 to 3 years of intense focus and prep before you actually sell, to
Mm-hmm.
get the business ready to be sold, to be sold to get the maximum value. You could sell it just like up and get up and tomorrow and say, I'm done with this, I want to sell it. However, you're probably not going to command the same multiple, going back to where we started this conversation, that you could if this business was structured appropriately. I think that's first and foremost.
Mm-hmm.
Secondarily, I think you start with making sure that your books and records are really clean and you have a solid valuation. So you have someone who is experienced in valuing your practices. I would say get someone who specializes in medical or therapy practices, whatever your particular specialty is. Get someone that focuses on that, so they can give you a baseline and know, if I were to sell today, this is what I would potentially get as a value for my business. And from there, you can say, this is where a financial planner comes in. What do I need to sell this for? So a lot of times there's a big gap between there. You may need, especially if you have not been, investing along the way and creating those retirement plans and having a way to extract cash flow from the practice along the way, you may need a bigger number. And so if you need $5 million on exit, and the business and the practice is valued at 1.2 million, well, there's some work to do. And
Mm-hmm.
it's not just on top line revenue. It's probably on increasing the profit. Maybe you need to, increase revenue. Maybe you need to charge more. Maybe you need to train better staff. There's a whole operational piece that Brandy can help with, obviously, SOPs and things like that, like really having things really solid within the practice, to whereas someone can just come step in
Mm-hmm.
tomorrow and everything's running. And if everything is not running, they know exactly what to do and who to talk to and who's supposed to do what they need to in order to make sure that it keeps running. And so there's multiple places there. The last thing I would say is you need to have a team in place, not for the whole 2 3 years before, but you really do need folks in place that are going to help support you and bring you to that finish line, get you to that, in my example, that $5 million valuation. You need a tax advisor, 100%. You need a business attorney. You need, from my vantage point, you need an M&A advisor. That's probably, sometimes it's one and the same. Whoever is doing your valuation may be an M&A advisor, that can help you find potential buyers for your practice, or will help you with your strategy of who you're going to sell to and determine that strategy, whether it's like PE, VC, or a strategic buyer.
Mm-hmm.
And then lastly, as you get closer, you really want an estate attorney and a financial advisor too, because they're going to provide the structure within which to put that money, so that that money is going to last for however long you need it to.
Yeah, I love it. I think that what I like about the conversation is it's a sophisticated conversation for what's next in your business. And it's the real tangibles of things. What's coming up for me is, for folks listening, they're probably like, what is an M&A advisor?
Yeah.
Or what's VC mean? Or
Yeah.
what are some of the abbreviations? I know, but what
Yeah.
are some of the
I know, I know. So you're right. Sometimes I slip into jargon and then here we are. So An M&A advisor M&A is short for mergers and acquisitions.
Mm-hmm.
So typically what they're going to do, just like you have a realtor when you want to buy and sell properties, and a realtor, let's say you're selling a property, a realtor is going to come in and tell you, hey, here are some improvements you need to make in the property. Here, you need to paint, maybe you need to, change the floor. You got to fix these things. We're going to take photos and make sure it looks good. And then we're going to bring the house to market. And here's the price point we're going to bring it at. They're going to do an appraisal or tell you roughly what your house is worth. It's the same for a business. And so an M&A advisor is going to do that work with you. There are different capacities. Some are more involved than others, but they're going to help you figure out what's ugly about your practice,
Mm-hmm.
what needs to be fixed, what are some easy fixes you can do that are going to get you more money, that are going to make that more photogenic, more give it more curb appeal, so that you can get the most value out of it. They're typically also going to help you figure out the structure of that deal, right? So, usually when you're selling a business, it's or a practice, there's going to be some terms. Maybe you as the seller are going to accept payments from the person who's buying it. What's called seller financing. Maybe they're going to get a bank loan and pay you off in total. You may have to stay in the practice for months, sometimes years, depending on the terms, over to transition in an orderly way. Like there's going to be all kinds of nuances to the deal that you're going to have to negotiate. And that person is going to be your point person to tell you what's normal in your industry, what's normal in the marketplace right then, what is reasonable for you to expect. And then when you're thinking about an exit, there are different types of exits that you can have, meaning you're going to sell to different people. So once again, tying into real estate, because a lot of us are familiar with that, you could have someone who is buying their first home and this is like the place they want to raise their kids in. That's the person that you're marketing to, or who's going to buy your place. You could have an investor that is going to come in and pay cash, and they're going to kind of use this as a flip property, or maybe they're going to rent it out and it's going to be an investment property for them. Those are two different buyers. And when you think about what they're looking for in the property, if you're thinking about what they're going to negotiate for you with buying, it's going to be very different. And it's the same when you're selling your business. There are strategic buyers that you can look for. So maybe there's a local chain of therapy, a therapy, a practice, therapy group in your area, and they want a location in the exact area that your office is located in. They may be somebody that will say, okay, this is the neighborhood we've been wanting to be in. This is already a great practice. There's some complementary services that are being offered, similar approach. This would be a great buy for us, right? Or it could be a venture capital fund. There are a lot of those out here where they're investing in different industries, and they may have a particular focus on medical practices, as an example, or therapy practices or dental practices, and they're going to just buy up a lot of little ones that are being sold so that they can roll it up and streamline with their other type of practices. So that's just an example of kind of what you'd be looking at.
Yeah, no, thank you for sharing, because I think with the owners that I work with, they get offers all the time,
Oh
for
yeah,
medical, for therapy, and it comes from different. So it does come from venture capital or private equity. It comes from the insurance companies who are now trying to
yeah,
expand and buy practices to bring them in network. It comes from the local person who is like, I'm trying to acquire. So one of the clients I
yeah,
work with, that's part of her scaling plan is acquiring other practices.
yeah.
We also have clients who are actively buying, just bought a practice, right? And it's their first time. They're new to this. So I think it's
Mm-hmm.
important. I know from my experience, I've been on both sides of the coin. And it was always interesting after acquiring a practice what that transition would be in the culture. Either you could always tell, like, the culture we thought was going to be in alignment, but it's not in alignment. And so there's a lot to think about. And even with
For
sometimes
sure.
having like the CEO stay, having them go. So there's a lot of different dynamics, which is what I love about what you're saying, that goes into the clarity that you need to have, and not
Yeah.
just selling from a place of desperation. Because with every single
Mhm.
time, Brandy, what do I do? I got an offer. What do I do? Well, do you want to sell your practice for less than what it can be worth? And
Yeah.
the buyer is not going to tell you, oh, we could buy your practice for $8 million, or we could buy your practice for 10 million, but we're going to offer you three, or we're going to offer
Yeah,
you 1 or 2 million dollars because it's good for us. And then we're going to grow
for
it.
sure.
And then we're going
For
to flip
sure.
it in order to make the money that we want to make. Or we're going to make sure that it's in good standing, has structure, and that the team's on point. So that way we can
Yep,
maximize the profit
for
that we
sure.
need to get in order to make more money.
I agree. And to your point, Brandy, I just want to bring up something. I think that I've seen this many times where there are practice owners who are burnt out
Yes.
by running the practice. And it's usually a sign that there are efficiencies that can be found. There may be
Mhm.
some strategic hires that need to be made. If you're finding yourself ready to just light a match to it, that's usually a sign that there's some work to be done. And so it can be really tempting. I always joke with my entrepreneur friends how, I'll get a job offer whenever I'm having a bad day.
Mhm.
Right. So I have a bad day in my business and I'm like, what am I doing? It's up and down. And then that's the day that a recruiter reaches out and is like, hey, do you want this $400,000 a year job? I'm like, wow, uh, it's tempting. Really tempting. You didn't come to me on my good days. And so, but those are the moments where I have to sit with myself and
Mhm.
say, is this what I actually want? And I think to move from an empowering space, from an empowered space is really important in this, in that
Yes.
if you already have in your back pocket a valuation that was done by your M&A advisor or by your accountant who does valuations,
Mhm.
then as those come, you can look at it and say, you know, I was valued at 7.5 million. They offered me 8. That's within spitting distance. Maybe I want to move up my timeline. But you can do that from a place of not from fear of, oh, this is too good to be true. I can't leave money on the table. A lot of times when things feel too good to be true, it usually is because it
Mhm.
is. And I think, not that you have to commit to it forever, but at the same time, don't leave money on the table all because you're having a bad day and it's been a rough quarter, rough 6 months.
It's so true. It's so true because there's the ebbs and flows and the emotional,
Hmm.
entrepreneurship it's an emotional journey. And to your
For
point,
sure.
yes, on those bad days, I get them too. Like,
Yeah.
hey, come, build this, and hey, come help us expand
Yeah.
this, and hey, and so you see it and you're like, oh, that is so
Yeah.
tempting. But on
Yeah.
the other side of it, I think that's where it's important for you to know yourself. And
Hmm.
I want you to own my time? Do I
Yeah.
want you to tell me where I need to show up,
Hmm.
here, here, and here? No, no, I do
No.
not. So I'm going to
Yeah.
go ahead. I'm going to, reframe and build what I
Yeah.
got going on. But I think the clarity
For
is so
sure.
important, and for you to have the data that you need where you can actually go back and look at the valuation and be like, no, you offered me three and it's worth 7.5.
Yeah.
Or, oh yes, just like a house. So I love the real estate
Hmm.
analogy too, and the metaphor. So good, so good. So what are some, like, what's the question I'm not asking is what I'm
Mm,
curious.
I think where folks leaving money on the table is
Mhm.
like the thing. And one of the things that I have so much respect for people who choose to, run and own businesses, because I think it requires a level of drive,
Yeah.
of commitment, of
Mhm.
relentlessness that is not found in everybody. And I think anybody who has become a doctor or a dentist or, a therapist, you've had to go through a lot of school and you've had to do a lot. And the last thing we want to do, especially when we start getting into those high, nice numbers, is to just leave money on the table because we don't know any
Mm.
better. And so I would say, my recommendation here is just make sure that you have a really solid team in place. Make sure that you have that data point to our earlier, what we were talking about just a moment ago. It's really important for you to know what your personal numbers are, what your personal, like, financial independence numbers are, what income you need in order to live the life that you're currently living or the one that you want to, so that you can just move with a lot more information. I'd also just say, my recommendation is not to get caught up in the things that come easy to you and are comfortable for you.
Mhm.
You know, as practitioners, you may say, yeah, I'm going to tinker with the medical stuff, or I'm going to tinkle with the offerings, or I'm going to tinkle with new modalities. That's beautiful and super important. And that's what's going to keep you very valuable and your skills sharp. But don't neglect like this financial aspect of things. Don't neglect the legal aspect of things. Don't neglect that part just because it doesn't come second nature to you, because I think it's just so crucial for securing and not letting all of this hard work that you've put in go for naught.
Absolutely. I call it makeshift solutions.
Hmm.
Like janky solutions that you're just putting in just because it sounds good at the
Yeah,
time. It's a
yeah.
piecemeal, it's a patchwork, it's the band-aid, like all of
Hmm.
that. And it's too valuable, and the compliance is important. It's amazing. And I think even with like tools now with AI and ChatGPT and no, you still need somebody who has an expert lens to
Yeah.
dissect that or to pull from it or to say, yes, this is the right information or this isn't the wrong or this is too much information.
Hmm.
Because sometimes I will say, I think it's a valuable tool. I think it's important. I think it speeds us up. But sometimes
Yeah.
I'll call it like team too much because
Yeah.
it's like so much information. And
Yeah.
clients will show up and they'll say, oh, I looked in ChatGPT. ChatGPT told me to do 20 different things, like, and it's
Yeah.
all, emojied out or bullet pointed or
Hmm.
whatever, and I am just like, okay, good information. Absolutely. You could do all 20 of these things.
Yeah.
Is it right? Is it correct? Or even to this point where they're like, even with like lawyers, and I created
Hmm.
like, oh, yes, you can create a whole contract on ChatGPT and use AI. However, you still need a lawyer who can no exclude this clause, take this out. This doesn't
Yeah.
need to be here, or say this language instead too. So I think
Hmm.
some of it is it's a really interesting time, but to the point of leaving money on the table, like get the right people in your corner and have the right partner so that way you can definitely maximize the practice is my whole point
A
of this episode.
100%. I couldn't agree more. And I would just say, you know, there are a million different strategies you can take
Mhm,
for exits, for building your practice, for building wealth. And this is the part where I think social media has a dark side, or like
mhm,
some of the internet online information has a dark side, because people will, before it used to be, oh, my neighbor told me that they do this, and so I need this, right? Like, I think I
mhm.
need this. And so there was a limitation to the information about different strategies or different investment opportunities or different tax strategies, and that may be good or bad. I don't know if it is either. But now with the internet, there are so many things that are being thrown at us, and all of them sound really appealing. But
Mhm.
if we have not done the work to understand what it is that we need, what it is that we want, what our preferences are, what our risk tolerance is, like how conservative, how aggressive do we want to get, those are the pieces that we need to know in order to decide if something is right for us.
Yes.
Because what I implement in my practice versus what you implement in your practice may be very different. It doesn't mean one is better, is wrong or right. It just means that one is more appropriate for me versus for you. And I would say don't cobble together things like that, right? Like, we're not going to get a rig, a multi-million dollar practice. We're not going to do it. Like, we need to have those sophisticated structures in place so that we can capture that wealth and be really well compensated for our time, energy, and the risk that we're taking.
Yes, absolutely. Absolutely. So I love it. So Anna, where can folks get in touch with you? This has been such a
Yay.
great conversation.
Thank you. I love this. So I mostly am on LinkedIn and Instagram. On LinkedIn, you can just search for my name. On Instagram, it's at ANNANJIEKONTE. You can also go to our website, poderwealth.com, and we have a newsletter where we send out information at least once a week, sometimes multiple times a week, that will give you perspective on wealth building and managing your finances as well.
Yes, 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 yes. So, for those of you who are interested in wealth building, making sure that you have a good financial planner in your corner, wealth advisor,
Mhm.
please go to the show notes and get all of the gems for Anna, so that way she can hook you up. So, thank you so much for
For
being here
sure.
and just enlightening us with this conversation. So, I appreciate it so much.
Such a pleasure. Thank you for having me, Brandy.
Thank you. Thanks for listening today. I hope you enjoyed the episode and it empowers you as the CEO of your practice. If you enjoyed the podcast, please make sure you subscribe, share the message, and leave a review. If you want more information and support in growing and scaling your practice, click the link in the show notes to take advantage of our free resources or apply to work with me directly. Thanks again, and I'll see you next time.